up, everybody? It's another day here at Royal Blu FX. Today we're going to talk about how to refine supply and demand zone. If you haven't already, go ahead and please subscribe to this channel because we always leave amazing content. Those that have, we love you so much. Apparently everyone is raving about our course. A lot of you guys are still asking about how to get access to the course. Our course is in the Discord. Go ahead right now in the link in the description below. Click on the Discord link right now. Access to the course and our strong community. Waste any time and get on with this video. Alright guys, so this is how we identify supply and demand, but most importantly how we refine supply and demand levels, okay, and or order blocks. So in front of me you guys can see that there's price going bearish and price going bullish. This is my demand zone here. One thing I want you guys to understand, that when we're looking for supply and demand zones, that everything in the market is fractal, okay? So that's one thing you really need to understand whenever you're trading price. That everything is fractal. And what is fractal? It really pretty much means that everything that you see in the daily time frame or the 4 hour, anywhere, all the other time frames below the daily or anything from the monthly and all the way down, right, it shows the same thing, right? It shows the same type of structure. So no matter if you see it on the daily, let's just picture right now that we're on the daily. No matter if you see it on the daily, like right here, for example, there's a high and there's a low, right? Internally between this high and this low, there is going to be more structure, right? Going bearish like this, highs and lows, that prints highs and lows all the time, just like this, right? So that's one thing you need to understand, is that everything is fractal, okay? So now in order to understand how do we refine order blocks is to understand the fractality nature of the market, okay? So for example, this over here is a demand zone. We have price chalking here, okay? There's a low taken out here, the liquidity, and the high was taken out as well, right? So most of you might actually identify this as an order block, this sell to buy area, right? And say, okay, well, prices are going to come back to this demand and then take off, right? Because more times than not, sometimes this will be acting as liquidity in this bullish area right here, right? This would most likely be your inducement, right? So however, in our instances, what we do here is we try to identify where price is most likely going to react from. There's two areas usually, actually. It's either going to react to this demand zone here, because you can understand from this low to this high, we just have another internal low, right? This is just to continue the internal structure bullish like this, right? And it will most likely do that, right? However, there is also the other aspect that price can also retrace, and that's simply by taking out this low, right, mitigating this major low here, right, and then pushing price up, right? Either of them are correct. You just need to understand how to apply the refinement correctly, okay? So let me just talk to you guys about this for a second. So if price is bullish like this, right, we want to see if this is our last sell to buy, and here this high to this low is an internal piece of structure that belongs to this low and this high. Why is that? Because we've just broken the main structure, okay? When you break the main structure, there's an internal structure between this low and this high. Naturally, we wait for price to get back to this demand zone here, just like this, to take an entry and continue bullish, right? However, there's always that internal structure that can continue price bullish. So what we do here is we wait for price to react to another supply zone right there, something like this. That will be your supply zone. There we go, supply zone, right? There's your sell, there's your reaction, sell to buy. That means that our weak suppliers, that means that we have weak supply, right? An internal weak supply structure. So which means we have it where we identify this. So you can identify this whole thing as an order block, this high to this low, right? Because on the higher time frame, essentially this big blue area here is an order block on the higher time frame. However, we can also go even a little further to refine this big supply zone here. We have to go inside between this high and this low. We have to identify, and we have to ask ourselves, where's that last look at price in terms of higher highs and higher lows. So if price broke this high, we want to identify where the last break was, right? Who broke this last high here? It was this sell to buy area, right? So that means we're going to come in, we're going to delete this right now, and we're going to mark it as this, the red box in here, right? So now that we have this red box, you can say, okay, well, this is my demand zone, and you can actually expand that to the left, right? You can wait for price to get there, and then we can wait for, and you know, if you want, you can obviously strike from this demand zone like this. However, we don't encourage it. We wait for confirmation. Now, if you want to continue refining the order block, right, refining this failed supply zone right here, right, which is the demand zone, you can also go in and take the extra you know, say you know, precaution or whatever by saying, okay, well, there is right there, you can see there's a high, this green area here where the price is going bearish, right, like just like this, that there's structure in there again that says that this was the last supply level or supply area that price went bearish to go bullish, right? So something like this, and we would go in and refine it just like that. Okay, now this is refining, okay? This is refining an order block or a supply or demand zone. So we would wait for price to get back there, just like this, right? You can go in here and say, okay, that's the order block right there, right? Or that's your failed supply, and then price will continue. Now, obviously, we're not looking to enter from here right away. What we obviously want to do is wait for price to get there, right? And then for price to react and then show us the structure reversing, just like this, showing us a chalk or failed supply to failed demand, right? Failed supply exists in order for price to continue bullish. Now, why would we want to refine the supply zone? It's because if you do this, right, there's a huge likely chance that price is going to come in and respond to this, to the highs over here, because price is reacting here based on break and retest sellers, right? So if you have price going down and going up, right, a lot of break and retest can identify this as a break and retest zone or whatever, right? This would be your sort of what is it, resistance, right, or support? Yeah, support here, right? Price. So there's a lot of buyers here. People are going to be buying. Price goes up, fails, right? Now those guys just lost, right? Then you and I would come in and say, okay, well, here's where we enter, right? We wait for the liquidity to be swept, right? We wait for the liquidity for those guys that are buying a little too early. And this is why it's important to go and refine the order block, just like that, right? So this makes a whole bunch of sense. We would enter here and continue price bullish, right? And naturally, when price is going bullish, right, we would have even this bearish move over here will have more structure to play with. So because everything is fractal, you'll see price doing this, just like this, right? And then you can sort of match each supply zone just like this and say, okay, well, where was this last supply zone reacting from? Right here. It was reacting from this one right here, which means we have this right here, this since price chalked over here, we wait for this failed supply, because this failed supply did not break this low. We wait for price to reverse, and this is where we identify where price is going to be buying from, because this supply, failed supply, reacted to this previous supply. Okay, notice if the other supply was just a bit above and targeting some imbalance in here, this may most likely not play out, because this is just a liquidity sweep from above here, and then price then tends to go bearish, right? So this is what we would do. All right, guys, we're back at a live example. So the previous video was messed up because my computer gave out. It overheated, excuse me, and it just closed the whole video down. Anyway, so what we're going to do here is I'm going to show you guys how this works. Okay, if I zoom out here, you'll see that we have a weak demand, strong supply. So if we have a weak demand, strong supply, we know this is the next supply zone here. In theory, all supply has to take over here, right? And in theory, all demand here has to fail, every demand zone, right? Every level, because we have a larger supply in charge, right? So, but what I also want to show you guys here is that when we have the supply zone here, you can see I went from this low to the high there, and you go all the way to the right, and you see right over here that there's your failed supply to demand. This is the supply zone right here that took place, and it failed. This supply failed to break this low right down here, right? So instead, it reversed, went going bullish, which means it interacted with this supply zone, right? So if that's the case, we would mark this out and say that this is our demand zone right here, right? So this is where we're interested in for price to get to, right there. And so once we do that, we just sit sit in our hands, right, waiting patiently for price to get to this demand zone. Now that price tapped, right, what we want to show you here is how to refine an order block. So let's go down to the 30-minute. I don't think I can go down on a 50-minute. Okay, so we're gonna have to play on a 30-minute as an entry time frame. So just picture the 30-minute as a as an entry time frame. But here's what's so cool. Check this out. We have two types of failed supply zones right in here. First thing I want to mention is that we want to be targeting our old high, where that old high was broken, right? That's our chalk right there, right? And then I want to drag your attention, guys, all the way down to here. Now I'm going to place the supply zone here, and you'll see that we want to identify where the last failed supply has happened. Okay, where did it take place? Okay, so far you can see it right here. There's your last supply here. This supply tried to put in the low here, but instead it was weak and it reversed bullish, right? It interacted with this previous supply. So our main objective here is to see supply, right, breaking the new low, right, or an old low, excuse me. And then what you want to see is an old, and then what you want to see is that's my dog barking. Then what you want to see is more supply coming in, right, that fails. Once you see the fail, price reverses. Notice that this high, this supply here tried to come down to close on this wick, but it never did, right? You can actually even do this and see that nothing exists there. And also to make liquidity, you can see there's your inducement, there's your liquidity, right? Price comes in, right, creating liquidity. So we can actually say that right over here, in the this very low here, you can see where the where this, you see, if you guys see this, there's your relative lows right there. Let me get rid of that. There's your relative lows right there. Okay, that's liquidity. And what we want to focus on is how price sweeps this when price gets there, right? So this is really, actually, let me just get this. Let me, from this, we want to be focusing on this, right? So notice how I just went from this high to this low, right? That was our major demand zone, and to this, right? Now, if we want to refine this, we can even go even a little further. We can say, well, really, it's this area in here, right? We ought to make sure, what is price after all the time? It's after liquidity, right? But it's also after areas of supply and demand to go and mitigate supply and demand zones, right? So we want to identify where the banks were negative, right? Where were they negative in their capital, right? Whenever they took price off, where were they negative? This is the last supply pressure here that price was negative. So, which means we can actually take this off and say this is all we want to ever focus on. So if I do that, right, let's make sure we have this correct there. Okay, we want to expand this all the way to the right and make sure that the price gets to this demand zone right here, because this is where we're really saying to ourselves the price is going to come to, right? Just like that. Now that's refining your supply or demand zone, right? Or your order block, whichever you seem fit. So right now we see that there's so much more room for price to get down to, right? We can't start looking for buys, and there's going to be a lot of traders that are trying to look for buys, right? They're trying to buy randomly. Let's play this rather quick so we can get to the demand zone. Okay, notice how price is reacting. There's more buyers interested to buy out of nowhere, right? They're just assuming where the buyers should come in, right? But we're still interested in this demand zone right here. A lot of people think this is a chalk here, right? Which it is, right? There's gonna be buyers here interested to buy. Right over here, you could potentially look for other entries here, right over here, if you want. But this is actually, it's not good, because what you're doing is you're entering here before price actually taps your supply or demand zone. Let's get rid of that quickly. All right, so what we're going to do is we're going to wait to see when price gets to that demand zone. Okay, let's continue playing. Okay, right, look at that. Oh, look at that, guys. All right, so price finally got to this demand zone. Right, look at that. It swept the liquidity, it swept the inducement, and the liquidity, right? Tapped our demand zone, right? So we should be all good here. Now, will I take an aggressive entry here? Most likely not, because we don't know if price can hold here, obviously. We want to, in theory, it should hold. And this is our next supply zone right here, which means that once price gets here, price could eventually just fall bearish here, right? So we want to be making sure that we mark out the right supply and demand zone. Like this is where the last high was, right there, right? So this is the high that we actually want price to break, right over here. Okay, I can't even make that. Okay, there we go. Right, so now let's wait for price to get, now what are we looking for here? What we're looking for is wanting price to get to the supply zone and fail, right? If it fails, this is a good sign for us, meaning that price wants to go bullish, right? Now, we also see that we have an internal failed supply right here, right there. This is also another sign. You could have entered here, actually. There's your failed sell to buy. I kind of went a little too quick on this one, but there's your next entry there. You could have actually also entered right over here. Right here, failed supply, strong demand. And then you look at the internal structure right there. This could have been another entry. Now, watch what I mean by this. There's your high here, right? And internally you have highs and lows just like this, right? So this would have been our next entry, because this would also have been a failed supply on a fractal standpoint of view. So we have, if we do this, see there's supply that took place and more supply took place, sell to buy, right? Price came back in and we entered and price left, right? So let's continue from here. And now what are we expecting? For this supply to continue bearish, it may also push bullish here, right? But we're going to be monitoring this area. The next entry is right here. So let's see what happens here. Okay, there we go. We do see something, yeah, okay, this should actually be respected. Let's see, yep, there we go. This should be going bullish here. So now we entered here again at this demand zone, right? Now, why did we enter here? We're gonna talk about it kind of quickly here. And let's go target the next supply zone, which is actually here. At minimum, this is where you should be targeting. The reason why we entered where we did is because, again, the same concept goes as follows. You have supply zone right here, right? That's your high. Price went up and it sold, came back up here. This was the last failed supply to demand, right? All these other supply demand zones were mitigated. So, which means this would be your next demand zone in line to be mitigated, right? To continue order flow. So what we're doing is we're following order flow. Once we did this, you can see again we had supply, failed supply to demand, and this would be the next. Oopsie, I don't know where I got that from. This would be our next demand zone, right here. So we're just going to follow order flow. Let's see if it taps. Yep, right there. Price took another. Price mitigated again. We're going to continue from here. Right, we can enter there, cover the low just in case, right? This is where we want to target, right? So we have two entries in place, and the next entry would be right here if price ever gets there. Let's see. Normally, when price is running like this, it usually has like 2 to 3 mitigation points. It mitigates about 2 or 3 times, and then just releases. Price releases and it runs. So let's continue. Okay, actually I do see another small one right here. I don't know where this is coming from. Why am I doing that? Okay, this would be the next one there. Let's see if price taps. It doesn't, and it starts to go from here, which means we do have this high, right? This high broke this low, so then price reverses sell to buy. This should be your next area to enter now, because price never got here. Now remember, what we're doing here is we're adapting to structure. Let's see if price takes off. Okay, it doesn't look so good. Okay, there we go. Boom. And so there we go. Hold on a second. Right there. Right, we recover the low, and we go and tag the high, just like that. And then now we're gonna go from here. Okay, so there we go. Okay, price went just dipped below. Right, it tried to take out our low, obviously. I have this thing where we cover the low, right, just in case price sweeps liquidity. It does this sometimes. You can either take this as a loss if you'd like. I don't see any other sell to buy here. Oh, actually I do right here. Now I can't see too much over here, so I'm just gonna have to generalize the demand zone. But this is another entry right here, right there, boom. Okay, so we would have hit TP fine there, right? So that was another entry right there, right over here. You could have gone to this wick obviously, but I can't see anything on the lower than this time frame, so I'll just generalize it and do this. Okay guys, so this is how you do it. Okay, we would have made a lot of R&R on this trade here, and then we would have you know, obviously, whoops, something happened to my computer, there we go. We would have already had major TPs. All right, just right here. So I hope you guys understood how these failed supply to demands work and how we refine the order block. Now, obviously, since I'm treating the 30-minute as the entry time frame, I can't really go any lower than just to refine these order blocks, but you can also obviously just generalize where that supply and demand zone is, because it all works the same. You can even see from this point of view, actually, right, not from here actually. You can see here where we have a failed supply to demand, right? And then you can see where we can generalize the supply and demand zone by simply marking this out. You can see there was supply there, failed supply to demand, right? So in here, oops, right there, if we zoom in, you'll see here this was the last sell to buy here. From this high, this was our last sell to buy. So it made sense for price to come in here, right? Normally when you do this, I mean, okay, it dipped below for whatever reason, you know, just to collect more liquidity. You can see there's a low there, there's another low there, price runs, right? It does what it does, right? I'll take that loss on the chin, it doesn't really matter. But then we have this high in this supply, right? So we have failed supply because this supply stopped here, never broke below the low, price run back up, came back and entered, and then we just hit another TP. So I hope you guys understand how this works. Again, this is how we simplify everything in our trading. If you guys like this video, please go ahead and subscribe to this channel and hit a thumbs up. If you have any questions, please go ahead and comment down, and we'll see you guys in the next video.